Brian.
Does he have a mic?
Is this audible? Yes, it is. Wonderful to be here, and like to kind of explain a little bit about what I do for a living. Now, my background, as you heard, is in data and analytics. That's pretty much what I've done now for a good length of time. And in my last role as the Chief Data Officer at Citigroup, I came across several what were considered intractable problems. There are several deep issues with regard to regulatory reporting, the underlying computations, the ease of use, and how you translate the increasing regulatory burden into an operable solution within the institution. These are problems that have been poorly solved in the industry, and even though I've been facing off against these issues both as a vendor as well as inside large banks, we believe there's a great opportunity going forward, and a lot remains to be done. So that was the kind of background and the genesis of the idea that led to the formation of the company. And I teamed up with my co-founder, Alok, who comes from a risk and enterprise risk consulting background, and we intersected in a past life where he was consulting for the very same problems that I was producing product for, notably around the Basel capital adequacy process. Now, in the years since the global financial crisis, the whole stress testing regime is something that all of us have, those of us in banking have kind of experienced and, dare I say, endured. So this is, again, an enormously difficult challenge that everybody had to overcome. And in my last role, I was vested with, pushing over the goal line several strictures that were placed on the company. But that's a kind of long preamble to the class of problem that we are seeking to address, which is that are these computational problems that banks face, is there an easy way to address that challenge? Can it be made interactive? Can a user or analyst actually cope with all of this computational burden? Run the computation, see the results in a few minutes or seconds, tweak and change the numbers or the assumptions, produce a new number, and prepare it and make it ready for submission. So this is the broad challenge that we seek to address. And in that, there is a deeper issue, which is that you can produce a singular output, no problem, but very often it's not explainable. You cannot defend that number adequately, let alone explain why it changed over the last period or against that last scenario. So therein lies the tale. So to kind of, this is a bit text heavy, but this kind of describes the day in the life of the analyst. Extraordinarily difficult to be able to cope with the variety of models that they have to implement with all of the attendant problems that I just alluded to. And it was our vision that can we build a platform using up-to-date modern technologies, notably using Apache Spark, which is commodity hardware, in-memory compute, extremely responsive even for the largest and most intractable compute-intensive problems. That's what we set out to do. And we said, this is what we'll do. We'll build Xplanr Analytics to make risk finance and regulatory computations interactive, transparent, and self-explanatory. A mouthful, but each one of these is loaded in terms of its meaning and its intent and its value to these institutions, we believe. And what we said is we'll build a common platform upon which we will run many applications. And lo and behold comes along this delightful new regulation, delightful from our perspective, I dare say. But the regulation is called CECL, as I was joking yesterday, not to be confused with a little child named in the 50s. But the CECL regulation is the FASB regulation with regard to expected credit loss computation over the life of the loan, and every instrument has to be computed using these models. So it's a non-trivial regulation, and most bankers who are in this room ought to be nodding vigorously at this point, okay? But the platform itself lends itself, and it's designed to address something like CECL, and we'll speak presently about, which end of the spectrum of the banking community we deal with. But it also lends itself to stress testing and other burdensome, computationally intensive problems that are regulatorily driven that the industry faces. So To summarize the problem statement, banks are swamped by the number of models they use, notably post-financial crisis. The regulators are not telling them exactly what to do. This is what may be called a principles-based idea. You're left to your own devices. You got to choose the methodology. You got to defend your methodology, in which case you got to compute, using methodology A and B before you come to a conclusion. The regulatory approach has shifted to an interactive dialogue in the sense that the regulator actually receives the submission and then says, hey, you know what, why don't you downgrade your CRE portfolio in this way, tweak your scenarios in that way, and can I have the result in the morning? So this type of interactive expectation of responsiveness on the institution's part is also a huge problem. And of course, along comes CECL and its international analog, which is IFRS 9. So what we've built is a product. We have built the platform and the application, as described here. To the left, we speak to the specific requirements of the reserve computational process, and to the right, we speak to the platform capabilities. We've been at this for around, I would say, 12 months now. The platform has been built out. It is, and I'll talk to you about the progress with customers at this point, but we are really ready for prime time in the sense that we can take on the largest global banks. We can take on a $1 trillion balance sheet with every class of lending that you're likely to encounter in the world and handle it inside the system, both for comprehensiveness on account of the algorithms and models required, as well as for the size and scale ambitions that these institutions require, inclusive of the interactivity demands that they may impose on us. So that's the key. That's pretty much built out and ready. So and if you were to think about us, really it would be about our core capabilities, which is we've got interactive compute nailed, and we've got the explanatory power, which is we can automatically understand the results of one computation versus the next, decompose the results, and produce the individual contributors that made the change happen, which really supports the CFO when they speak to the street and explain, or on the hook to explain what it is that has changed. So that's the capability we bring to the table. Who's the target market? The target market, delightfully, is everyone. Okay, which is every institution, because this is accounting. There's no cutoff. There's no kind of big banks have to do this and the small banks can get by with something. No, because it's accounting. And it's going to auto lenders have to do it. Just about anybody who puts a loan on their books has to account for it differently. And loosely stated, it is that on the day of booking a loan, on the very first day, you got to create a reserve for that loan. Crazy as that might sound. But that's the requirement that the accounting rules cause. Now, obviously, the demands and the requirements for the smaller institutions are going to vary considerably from the bigger ones. The expectation is that the bigger ones have the requirement, they would rather approach us as a platform provider so that they can solve the general class of problem that we speak about. And of course, the smaller institutions are more interested perhaps in an out-of-the-box CECL-oriented solution as a first step. The comparative positioning is here. Surprise, surprise, we are on the top right corner. So there's a very interesting dynamic here. We believe that it's not about producing that number. It's the way you produce the number so that you set yourself up so that the interactivity and the ability to react quickly and the ability indeed to produce that variance and attribution, which is extraordinarily difficult to do, but it is extraordinarily important, that differentiates us. So there are others that can actually produce the numbers, less so and more so per this chart, but we believe a combination of the platform strengths as well as the out-of-the-box solution capabilities are really what will, that which will set us apart. The application is complete and ready, and then we'll speak presently, as I said, about which banks are currently in pilot and beta. But I'll point your attention or draw your attention to the bottom right chart, which gives you the classical waterfall chart. It kind of says you had 100 million in the reserves last quarter, and you got 106 this quarter. That 6% variance ought to be explained. How much was caused by a change in the portfolio size? How did the portfolio degrade or otherwise? What was the maturity and tenor behavior different? And so forth and so on. So the decomposition of what changed is really a very difficult thing to do, and it's something that we do out of the box because we can understand both sides of the computational logic pretty well. The technology itself is Apache Spark, so I won't belabor the point, but it allows for us to approach this problem at an interesting new cost point. You don't have to buy a database. You don't have to buy expensive hardware, and therefore, you can work on this open source technology and essentially ride the cost curve quite nicely and elegantly. Again, back to the current positioning, the larger institutions, as I said, we approach the market this way. The larger institutions are interested in a platform so that it solves the general cluster problem, and the smaller institutions are interested in the out-of-the-box app use. From the founding team's perspective, my own background, both in the technology as well as in and out of the financial institutions, I grew up, my first job was with Citigroup. I've spent 17 years doing a variety of roles internationally. Alok, my co-founder, has done, he's led the enterprise risk practice in this space in India. So we kind of bring together a fair amount of smarts around this, having experienced prior generations of this problem class. So we kind of have seen where the big issues are. So that's why I feel very fortunate to have teamed up with him. We are in we are in 2 tier 1 banks already, 2 out of the top 3 banks in the US, where we're doing a POC that's expected to move to a pilot. So that's we feel very good about that. We have 2 beta customers as well at this point, going live in the next couple of months. And we've signed a memorandum of understanding to take the product to market to the state and community banks with a New York City firm that deals with 800 such institutions for a deposit sweep product as well as for providing capital. So broadly speaking, they're analyzing the loan book anyway. Those are revenue projections, expected to grow to 26 million in 3 years. The delight is that this is driven by the regulatory calendar, so everybody has to make a decision. So we are betting on the fact that we have a confirmed necessity to buy that we are working with. We are looking for $1.5 million to jumpstart our sales process with the credentials that come with the 2 tier 1s that we've already sold to. So with that, I would be delighted to meet any of you, many of you at the booth. And this is what we are, making risk finance and regulatory computations interactive, transparent, and self-explanatory. Thank you very much.